Hey option traders, today we're looking at how to sell a cash secured put on Iron Mountain Incorporated. Iron Mountain is organized as a REIT, and the majority of their revenue comes from storage and information management solutions. The company is currently showing a 3-year EPS growth rate of 10% and pays a dividend of 5.2%. A cash secured put is considered a neutral to slightly bullish trade. So a cash secured put basically involves writing an at the money or out of the money put option and simultaneously setting aside enough cash to buy the stock. The goal is to either have the put expire worthless and keep the premium, or be assigned and acquire the stock below the current price. Selling put options is an easy place for investors to start with options. They're similar to a covered call and are pretty easy to understand once you know the basics. Traders selling puts should understand that they may be assigned 100 shares at the strike price. So let's take a look at Iron Mountain and set up this trade. So here we are on my Thinkorswim dashboard, and to set up this trade, first just type in IRM, which is the ticker symbol for the stock. And if you're on Thinkorswim, you're going to want to select the single for the spread type here in this box. We've got the strike prices down here in the middle, and you're going to want to make sure you have the January 21st expiration date selected. I'm gonna scroll down here and look for the 45 strike, which is right here. And we're gonna be looking at this side of the screen because we're looking at put options. Down here, I have the trade all set up. We are looking to sell January 21st expiring put option, the strike price of 45. An investor selling this put would receive $115 into their account, which would be theirs to keep. If IRM falls below 45 by January 21st, they would be required to buy 100 shares at $45. The effective net cost of the position would be $43.85, thanks to the option premium received. If the stock stays above 45 at expiration, the put expires worthless. You keep the premium and it acts as a nice little income play. The main risk with the trade is similar to outright stock ownership. If the stock falls quickly, the trade will suffer a loss. However, the premium received will help to offset the loss, so your risk is actually lower than the stock ownership. The maximum loss on the trade would occur if IRM fell to $0, which would see the trade lose $4,385, but most traders would cut losses long before that. With IRM set to report earnings in early February, this trade should have no earnings risk. So to recap, cash secured puts are a great way to generate a return on strong stocks, potentially without ever having to take ownership. If the put does get assigned, then the investor takes ownership at a reduced cost base and can potentially begin selling calls to generate additional income from that position. So as always, remember that if you're new to options, make sure you practice with a virtual trading account before risking any real money. And remember that options are very complex and investors can lose 100% or more of their investment. Be sure to check out investors.com/options for more option trading tips.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.